there, folks, and welcome into today's video. Hope you guys are doing great out there as always. Today we get into 3 beast stocks that are moving up pretty big, and they're very under the radar stocks. Okay, all 3 of these stocks very under the radar stocks. You do not hear a lot of talk about these stocks at all. These are not popular stocks, but these stocks are all of a sudden starting to make some big moves, and I want to share what's going on with these companies, kind of how I'm viewing it. Am I buying these stocks, selling these stocks? Do I think these stocks have a ton of upside potential, downside potential? Where do I think these stocks are going? So hope you guys enjoyed this video. As always, all I ask in return is that you smash that like button, okay? That's all we need. That's all we need. Hope you guys enjoy this. As always, if you're looking to up your investing game and you want to join the private stock group, check out the first pinned comment down there, especially if you want to learn more about the private Discord chat, the course curriculum, the Millionaire Playbook, all those sorts of things. Definitely check out the main pinned comment down there. If you want to check out our value email list, that's free to do so. That's the second pinned comment down there. Alrighty, guys, the first one up here of the bunch that is making a big upward move all of a sudden on the DL. Not a popular stock, not a stock that's talked about at all. Dropbox, ticker symbol DBX on this one. Okay, this is not a stock you ever hear anybody really talk about. I used to talk about this stock back in like the fall time when I was buying this stock heavy, right? But outside of me talking about this back in the fall, this is not a stock you ever hear really talked about on CNBC or almost anywhere out there in general. Not a popular stock on the internet at all. And I just look at this stock as a beautiful upside potential stock with huge upside, okay? And we're already getting some really nice gains, already up $90,000 just on these shares here, and I own more shares in other accounts as well, okay? We're already up $90,000 on this. This is a stock I just started buying around fall time last year. I started buying, and really loading up, and I think I stopped buying this stock, I believe it was in January of 2021. And after that, I really never talked about the stock for the most part anymore. It's a cloud company. They're huge with small businesses and mid-sized businesses. They're getting in more and more with universities as well. They also own a business called HelloSign, which is a growing player in the e-signing of document space, right? Which is something we just see getting bigger and bigger over time. Extremely sticky business model, a recurring revenue stream business model, and this is also a business where they don't have a ton of customer concentration. So it's not one of those companies where it's like, well, if that one customer left them, they're done or something like that. That's not this company at all, okay? So DBX is a beautiful, beautiful stock. I'm super excited about it, and I honestly feel like the move in this one is just starting, actually. I truly feel like this one's just starting. We're up about 44-45% in this one so far. I think the move is just starting in this one, okay? And a lot of exciting things going on here, okay? First off, look at the stock chart, all right? So back in December, it's a $21 stock, and it's just kind of been moving up and up and up and up, right? And just showing a lot of strength. It's $11 billion market cap now. I think this is growing into 20, 30, 40 billion over time easily, okay? Easily. Look at this here, okay? This is some big news that came out. A lot of people miss this. I mean, a lot of people aren't even paying attention to this stock, never mind, something like this, right? Everybody's so caught up in the other stuff that's going on in the market, they just totally forget about, some of these stocks flying under the radar, right? Activist Fund Elliott Management has procured over 10% stake in Dropbox, DBX, valued at over $800 million, becoming the cloud storage group's biggest institutional shareholder by beating Vanguard Group. The Wall Street Journal reported CEO Drew Houston is the biggest shareholder of the company, right? And obviously Drew Houston is very focused on growing this company over the coming years, right? From everything we've heard from him, okay? Dropbox modest valuation of $11 billion compared to cloud peers like Salesforce and ServiceNow has fueled takeover speculation. I could definitely see a lot of companies wanting to buy out Dropbox, okay? I'm talking, the biggest of the bigs out there in the tech space. I don't think Dropbox should sell. I would not be in favor of Dropbox selling, although I would make a ton of short-term money on this. I think the long-term opportunity in this company is way too big and the valuation is way too low right now, and we'll get into the valuation in just a moment, to make sense of a takeover or something like that, or selling out. Because they could sell out for, let's say, 15 to, I would say, $17 billion, right? And that's a really nice premium from here. I would make another, 50,000 plus on the stock, probably even more than that, maybe 70,000 plus, right? And that would be cool, but I think there's a lot more upside potential than that in this stock overall, okay? The speculation was intensified by Salesforce plans of acquiring Slack in 2020 for 27.7 billion. KKR Group, basically they along with this company Clayton confirmed they're going to buy out Cloudera for 5.3 billion, right? So you see a lot of moves in this space, right? And this is a space that usually these companies get hefty valuations on them when they do get bought out, right? But you look at Dropbox, look at this. This is a company that is at a forward P of 21 on this stock, okay? Forward P of 21. So we're not talking about some insane valuation at all on this stock, especially when you consider the business model is growing very, very nicely. We're talking double digits revenue. We're talking the profitability for this business model has really just started to ramp up in the past couple of years, okay? And that's expected to continue to ramp up in a massive way over the coming years. You think about all this, right? In a great balance sheet position on this company. Like we talked about, they're growing, they have almost no customer concentration, and they have a recurring revenue stream business model that is extremely sticky. Like if you're a small business and you're used to using Dropbox for your cloud, it's a difficult decision to decide, oh, let me go use some other service now or something like that. Like once you get used to using these things, usually you don't want to, switch it. Like I've been using Dropbox for, 6 years now or something like that, ever since I started my real estate marketing company back in the day. And I'm not interested in leaving Dropbox. Like, give me a break. Like it's just not even worth my time. I love the service. I know exactly what to do, how to share things back and forth with the team and stuff like that. Like I'm not switching out of that company. So at the end of the day, this is a stock I believe is going to continue to soar and roar higher and higher. And it'll continue to kind of go under the radar. And next thing you know, all of a sudden the stock's going to be 30 and 35 and 40 and 45 over time. And it'll just continue to drift up over time. It'll have some dips here and there. But in my opinion, this baby's just going to, it has so much upside over the coming years. It's ridiculous. Like I said, I think it's a perfect buyout candidate for one of the big tech companies. I just don't want him to sell. There's too much upside here. Drew Houston's going to be focused more on innovation than ever before now moving forward. That's really exciting, right? So yeah, I love Dropbox, and this one will continue to be a bigger and bigger winner over time. Let's get to the second stock of these three stocks that is going completely under the radar under Wall Street right now, and that is Revolve Stock, okay? RVLV. This one is just completely under the radar right now. You don't really hear anybody talking about Revolve Stock, okay? Very few and far between, whether you're talking about, mainstream media, whether you're talking about even on the internet. Revolve is not a super popular stock. But, there's a lot of money. There's a lot of money in this one. Let's just put it that way, okay? The gain in this one for us here, 370%. This isn't even the only account I own Revolve in. It's been tremendous. It's a six-figure gainer for us so far, okay? Just in this account alone, 2,375 shares, cost base of $11.86, okay? What's going on with Revolve here? Am I scared that this one's going to start dropping and go back down a bunch, okay? Well, Revolve, okay? First off, they're an e-commerce company in the clothing space, all right? And the stock has been on a tremendous kind of run over time. And you know what I call this run? I call this the getting closer to reopening phase, right? That's what I call this run the stock has been on. If you go back last year, I don't know if everybody thought the world was going to be closed forever, but obviously that's super unrealistic, right? So as over time, we've gotten closer and closer to the reopening of the world, right? The stock has just continued to climb higher and climb higher. And that's exactly what that chart tells you, okay? And what we're seeing out there, right, is more and more big events are starting to happen, right? Like all these things that, a lot of folks would love to buy clothing for, all those are starting to come back, right? And, I can tell you already out here in Vegas and when I was in Arizona and whatnot, it already feels like things are already going that way, okay? And so the whole, what we've had to go through over the past 16 months, that's all in the backdrop now, leaving, and we're going forward with this thing, right? And so Revolve is going to be in a massive position to benefit from all this, right? Being a clothing company, especially that they're at the higher end of the space, right? And they have this website, which is their big one, Revolve. You've probably seen them, advertised all over the place, especially probably Instagram, right? And average order size, usually for Revolve, if I recall, was a little under $300 per order. So, yeah, it's not like people spend a small amount of money on Revolve or something like that, right? And they also own this business, very interesting. This is their website Forward, okay? And they have a ton of the higher end brands here, okay? Alexander Wang, you see Balenciaga, Bottega Veneta, Burberry, Givenchy, whatever you want to call it, Off-White, Saint Laurent, Versace, a ton of these high-end brands here on Forward. So they're definitely benefiting from kind of, there's definitely, those companies are in a really strong space. The luxury space is very, very healthy right now. Very, very healthy. And so Forward is directly benefiting from a lot of those popular high-end brand names, okay, in a huge way. And don't be surprised if they land other big clients over the coming years as well, okay, at least as far as like vendors go in the luxury high-end space, right? They could do still a lot of moves with LVMH over time, right, who owns a ton of those high-end brands. So don't be surprised if LVMH and them end up getting more of a deal over time, okay? Now, if we look here, and we look at the company's kind of valuation growth, things like that, okay? So essentially the company's analysts expect, 17 analysts are now covering the stock. The company's expected to do $1.05 EPS next year. So that puts this company at a 50-something forward P. Now, 50-something forward P sounds a little rich, okay? But it is not that rich when you consider the growth of this company and what they have, not just over the next year or two, but when you really think about this company over the next 5 to 10 years. A 50-ish, somewhere in the 50s forward P is not high. Also keep in mind they could easily beat that number, right? But if you look at this here, revenue growth this year is expected to be 31%. Don't be surprised if they blow that number out of the water. I'm just going to be completely honest. I mean, I'm seeing a huge ramp up in folks getting back to even traveling and things like that already. Vegas out here this past weekend was crazy. It looked like it was back to the old days, man. And so I definitely see, travel's a huge thing for clothing sales, right? And so there's a huge ramp up coming. Don't be surprised at all if they blow this number away this year and they actually grow anywhere from 35% to 45% revenue, okay? 31% is nice, but just don't be surprised at all if they blow that number out of the water and come in with a number like 800 mil or actually well over 800 mil, okay? As far as next year, they're expected to grow 20% plus, right? And so I'm looking at this company at a 50-something forward P, and I actually think this one will move higher over time, okay? In the short term, it could dip here and there and things like that, but there's way too much demand for their products, the brands this company has, and this huge demand push that's going to happen for Revolve now. It's already happening for them, but it's going to happen even more. And then when I think about the brands they own long term and being where they're positioned in the market, they're just in a beautiful, beautiful sector, especially when it comes to when you're a big brand name in that sector, right? And they don't have to deal with all the discounting and stuff a lot of retailers used to have to go through in the physical retailer space, right? It's just different. The online space is different, and the way folks shop online is different. And the products and services folks want online is different than it used to be back in the day. Back in the day, department store biz, Macy's and all those guys, man, it used to be a tough fight, right? And it was all about who could do the 70% off sale, right? And with something like Revolve, it doesn't matter. The 70% off sale is irrelevant for a company like Revolve. That's just no, that's not their business model. That's not what they do or anything like that. So that crazy discounting the big guys used to have to do back in the day, that's not going to be something these retailers are doing anytime soon, if ever, because that's not the way it's done, right? That's just not the way it's done. There was a different business model back then, and that will make a company like Revolve much more profitable, which is also something that's going to lead to a much higher stock price over time for this company. So yeah, this one I'm not really scared about at all, and I think it will continue to grow a lot over time, and I'm huge believers in the management team there, okay? Now, third stock. This stock I worry about a little bit, okay? This stock is definitely one of those moving up very nicely, under the radar stock. You don't hear a lot of talk about it at all, okay? But I am a little bit worried about this one, and I want to kind of explain where my worry comes from in regards to this stock and this stock's price, okay? Number 3 here, Upwork, okay? UPWK. This is an under-the-radar stock that's been absolutely phenomenal for us. Here in just this account alone, we're up about 30,000 so far, up over 300% on this one. Upwork, if you don't know, is a freelancing economy type company, right? They're huge in the freelance economy, right? One of the biggest players, if not the biggest player in the world when it comes to if you need to hire somebody as a freelancer. Upwork is one of the biggest names, right? Like pretty much if you think about that space, you usually think about Upwork and Fiverr, Upwork, Fiverr, Upwork, Fiverr. Those are two names that always usually comes to somebody's head if you need to hire somebody for freelance work, right? And so Upwork's in a phenomenal position to benefit for years to go in the future. And this was a stock that was very, very beaten down when I was able to get in this one, okay? Now, when it comes to Upwork here, okay, the company has amazing growth and should continue to have amazing growth for years to go in the future, right? Current year, 30% plus revenue growth expected. Next year, expected to grow 24%. So their growth numbers are looking phenomenal, okay? However, with this company, it is expected to lose money this year and lose money next year, okay? And so where my worry comes is if they're not profitable not only this year but next year, then you get into this game of it's a lot about feeling when it comes to a stock like this, okay? There's a lot about feeling, right? And so now if this company can somehow, get to profitability next year and they start talking about profitability, the story changes a little bit. But if this is true and they're unprofitable this year and unprofitable next year, that's something I worry about, okay? Because then it gets back to the story a bit, okay? Once again, we talked about this, right? It's all about the freelance economy, right? And there's a view from Wall Street that maybe there's been a big pull forward in the freelance economy landscape, right? I don't think so. I think this whole movement is going to continue on for at least the rest of this decade, if not many decades past that, right? And so I don't see this being a game that's over anytime soon, to be honest. And I think this is something that's just going to continue to grow. However, with this company being a money loser, and then you compound that with, Wall Street all of a sudden maybe changing opinion on it and being like, no, well, Upwork's not a good stock because, they had a huge pull forward in demand. Now the world's getting back to normal. Companies are working in the offices again. Maybe they don't need Upwork. That's when you could get a big move downward in the stock price. And so that kind of worries me a little bit in regards to this one as far as its stock price goes. As far as me, I don't really care, to be completely honest. Like, if they move the stock down and all of a sudden analysts are putting out negative notes around this, right? And they're saying sell Upwork, blah, blah, blah. I'm not worried from the standpoint of, I got to sell the stock or something. I'm just thinking about it from a standpoint of, could this stock move down? I think it definitely could move down just based upon if analysts all of a sudden start to gang up on it and say, the workplace is getting back to normal. People don't need the freelance economy anymore, something like that, which is obviously completely unrealistic. So, yeah, these are 3 under the radar stocks that are just absolutely beasting. We got Revolve, Upwork, and obviously Dropbox. You don't hear a lot of talk about these ones, man. They're not popular stocks, but the gain's been good, and I think some of these gains will get a lot bigger in the future. So, hope you guys enjoyed this video. As always, if you're looking to join us in the private stock group, you want to apply to try to join in there, check out the first link down